This is your LMAX exchange technical update for Tuesday, December 13th, 2016. Euro dollar. So although we saw some intense pullbacks in the euro in the previous week down towards the yearly low from last week at 105.05, the market was unable to break down below that 105.05 low and has since rebounded, putting in a bullish outside day in Monday trade. This sets up the possibility for some more choppy trade and potentially some more upside back towards the recent highs that we saw above 108 and just shy of 109. But ultimately here, the downtrend does remain firmly intact, and so if we do see rallies into Tuesday and Wednesday, they should be well capped in favor of a breakdown below that 2016 low at 105.05 and towards that multi-year base from 2015 at 104.63. At this point, only back above that high from last week that we saw around 108.75 would compromise the current immediate downside pressure. Sterling dollar. So cable has seen a slow gradual recovery out from the 31-year low that we saw earlier this year. At this point, the market still remains confined to a downtrend while it holds below that previous base at 128. But if we do see the market try to establish back above 128, it could suggest a longer term base carving out and will take the immediate pressure off the downside. Inability to establish above 128 will keep the overall pressure on the downside and suggest we could still be seeing a lower top ahead of a resumption of declines back towards and potentially below that 31-year low that we saw back in October of 2016, down around 120. Dollar yen. So dollar yen has continued with its rally all the way up to 116.13 on Monday before reversing course. The market has been overextended, and we've been warning about that, which does warn of a potential correction lower before what is now a newly adopted uptrend resumes. At this point, key support now comes in at 111.36, and so we could see setbacks extend down towards that level with a break below to open the door for a more significant correction back towards some previous resistance, now turned support in the 107.50 area. But again, this market is extended, but is also trading within a bullish structure now, which should see dips very well supported, although we could still see a correction over the coming sessions that takes us lower. Euro Swiss. So Euro Swiss continues to be focused on the downside despite Monday's bullish price action, and the market ultimately is expected to trade back to retest the 2016 low at 106.24. At this point, it would take a break back above last week's high around 109 to take the immediate pressure off the downside. Aussie dollar. So Aussie has seen a little bit of a rebound and consolidation in recent trade. The market should be very well capped and continue to be very well capped ahead of 76, ahead of what should be the next lower top and a resumption of declines down towards a retest of medium-term support at 71.45. Dollar CAD. So dollar CAD has been undergoing an intense correction lower, but overall this is a correction within a broader uptrend, and any setbacks from here should be very well supported ahead of 130 in favor of that next higher low and a resumption of gains back towards and above the recent high at 35.89 that was seen back in November. Kiwi dollar. So Kiwi has been chopping around in recent trade. The market has been seeing a correction out from since breaking down below psychological barriers at 70, but on a broader basis, the market looks to be topping out in 2016 after stalling just shy of 75, and a lower top is now favored somewhere ideally ahead of 73, ahead of the next downside extension below next key medium-term support at 69.52. SPX 500. The S&P 500 continues to trade up to fresh record highs. The market has most recently cleared psychological barriers at 2250 and now has 2300 in sight. At this point, any setbacks are seen as a corrective, with the market needing to break back below 2180 to take the immediate pressure off the top side and suggest a more significant reversal. Gold. So gold has seen some setbacks over the past several sessions, with the market tracking in oversold territory, but as we have been talking about in recent trade, the market has also been testing some critical multi-month internal support in the 1130 to 1180 area and is expected to hold this level as a longer term base looks to be carving out. Look for a break back above recent highs that we saw that come in from the previous weekly high around 1188 to take the immediate pressure off the downside and suggest that this market could indeed be reversing course and establishing this base in favor of the next major upside extension back towards a retest of the 2016 high at 1375. Only below 1130 on a weekly close basis would negate this basing outlook and put pressure back on the downside for an assault on the 1000 barrier.